Good morning, everyone. At KBC, we are proud to report a strong net profit of €1,018,000,000 for the second quarter of 2025. Compared to the result for the previous quarter, our total income benefited from several factors, including the sharp increase of net interest income, higher insurance income, better trading and fair value income, and the seasonal peak in dividend income. Quarter on quarter, our net fee and commission income, though still at a high level, declined slightly. Our loan portfolio continued to expand, increasing by 2% quarter on quarter and by 7% year on year. Customer deposits were also up 2% on the quarter and 7% year on year when we exclude the volatile, low-margin short-term deposit at KBC's bank's foreign branches. Operating expenses were down significantly on their level in the previous quarter. This is due to the fact that the bulk of bank and insurance taxes for the full year were recorded as usual in the first quarter. Disregarding bank and insurance taxes, operating expenses were up by 2% quarter on quarter and bring the cost-income ratio, when excluding those bank and insurance taxes, at 41%. Insurance service expenses after reinsurance were down, whereas the loan loss impairment charges increased. The credit cost ratio for the first 6 months of 2025 thou remained at a favorable level of 15 basis points, well below the through-the-cycle value of 20 to 30 basis points. Consequently, when adding up the results for the first and second quarters of the year, our net profit for the first half of 2025 amounted to €1,564,000,000, up 9% on the year earlier figure. Our solvency position remains strong, with an unfloored, fully loaded Common Equity Tier 1 ratio under Basel IV of 14.6% at the end of June 2025. Our liquidity position remained very solid too, as illustrated by an LCR ratio of 157% and an NSFR ratio of 135%. In line with our dividend policy, we will pay out an interim dividend of €1 per share in November 2025, as an advance on the total dividend for financial year 2025. Furthermore, we decided to increase our guidance for net interest income for full year 2025 to at least €5.85 billion, up from our initial guidance of at least €5.7 billion. We also decided to increase our guidance for the total income growth of 2025 to at least 7%, up from our initial guidance of 5.5%. Given the confirmation of the cost guidance of 2.5%, this means intrinsically that the jaws increase from the initial guidance of 3% to 4.5%. We continue to lead the way in digital innovation, with Kate playing a pivotal role in delivering smarter, faster and more personal services to our customers. Today, 5.7 million customers use Kate. That's 19% more than 1 year ago. Operationally, Kate now autonomously resolves 7 out of 10 customer queries across our core markets. That's an equivalent to the workload of over 300 full-time employees, allowing our teams to focus on more complex and valuable customer conversations. In conclusion, I would like to confirm that our ambition remains clear: to be the reference in bank assurance, innovation and digitization in all our home markets. We pursue that goal not only through a strong customer-focused business model, but above all, thanks to the trust placed in us by our customers, employees, shareholders and all other stakeholders. That trust means a lot to us, and I want to thank you sincerely for that.